Welcome back to Wall Street Podcast. China's property market, is it just deep distress or maybe something more? A calculated pivot. We're cutting through the noise today. We're diving into the Goldman Sachs China Property Weekly Wrap, the one from July 15th, 2025. We'll pull out the key data, the policy moves, and what it means for valuations.
Exactly. The goal here is a quick, high-impact overview for you. What's the state of play and what are the real implications?
Okay, let's start with policy then. Seems like central authorities are really pushing urban renewal now. It's not just new builds, right? It's renovating older areas, upgrading infrastructure, using tech like IoT and big data, aiming for these livable smart cities.
Yeah, and Mo heard the housing ministry, they're reporting some provinces are already past 50% of their annual target for these renovations. That's quite fast. But there's a note of caution in the report, too. If they lean too hard on any new construction, even the social housing side, it could just worsen the inventory problem.
Right, that overhang issue isn't gone. It's a tricky balance.
Okay, shifting gears to market performance. Week 28 new home sales. Wow, they look pretty rough. Down 30% week on week.
And down 26% year on year. It's definitely soft.
But what caught my eye was the detail. Tier 3 cities and the central and western regions actually held up relatively better.
That is interesting.
Secondary market was down too, and sentiment seems pretty negative, judging by agent comments.
True for the week. But if we zoom out a bit, year-to-date secondary sales, the actual gross floor area sold, it's up 16% compared to last year.
Ah, okay. So there's still underlying demand for existing homes then.
Seems like it. But the inventory figure is still high, about 26 months worth, so supply concerns are definitely still lingering.
So with all that, what about valuations? The report mentioned a bit of a bump, right? Offshore developers up 6% in the week, onshore up 2%?
Yeah, a small lift. But the key point is where they're trading overall, still around 0.5 times 2025 estimated price to book.
Half their book value, essentially, and big NAV discounts, too. Exactly. And the report flat out calls these downturn trough valuations. They're comparing it to the lows we saw back in 2008, 2011, 2014.
Wow, okay. So the implication is a lot of bad news might already be baked into these prices.
That's the suggestion. It doesn't mean things turn around tomorrow, but it could signal, potential long-term entry points if you're patient.
Let's dig into that a bit. First, this urban renewal policy. How does it actually change things for developers' profits, the whole renovation versus new build balance?
Well, it clearly favors developers who are good at renovation and redevelopment. That's a different skill set than just buying land and building new towers. The risk is, like we said, if the social housing part of it still adds too much new supply overall, that could dampen the benefit.
Got it. Okay, second point. Those Tier 3 and Central Western cities doing relatively better. Why might that be, and what does it tell us about a potential recovery?
It could point to more localized demand, maybe less speculation compared to the big coastal hubs, or specific local policies kicking in. What it definitely signals is that any recovery is likely to be really uneven across the country. You can't just paint it all with the same brush. Granular analysis is key.
Makes sense. Okay, last one. If valuations are at these troughs, what does that mean for an investor today? Is it actionable?
Troughs suggest market sentiment might be at an extreme low. It doesn't guarantee a bottom, but for investors with a longer view, it highlights that prices might reflect the worst-case scenario already. It encourages looking for potential inflection points, where fundamentals might stabilize or policies start to really bite, potentially unlocking value. It's about patience and diligence.
So summing up, China's property market is in this really nuanced phase. You've got strategic policy trying to shift focus, sales data that's weak overall but with pockets of strength, and these historically low valuations.
Yeah, and maybe a final thought to leave you with. Could this shift, this move away from just pure volume growth towards quality and urban renewal, could it actually reset the whole investment idea for China property? Maybe towards something more sustainable, even if it's slower growth?
Something to definitely consider as you analyze the opportunities. We hope this deep dive was valuable.